Hi everyone, this is Ken from Crypto Trading KS. If you're celebrating the Chinese New Year, Happy New Year. The VIX came down in the past trading session inside the main markets. As well, the DXY came down. You'll notice the gold also came down. This was primarily due to an increase in yields, which also brought bond prices under negative price momentum. The DXY decreasing sent oil higher, and the VIX decreasing was risk-on activity that sent the major indices higher as well. With an institutional mindset, we don't just look at the chart that we're putting money into, we make sure that we look at all the rest because they really matter. Look at Bitcoin. It staged one heck of a rally as shorts were liquidated right, left, and center. And we can see that blue line. That blue line in here is Bitcoin's gravitational pull over Ethereum. So how did Ethereum do? As expected, it went up. What about Solana? Can escape Bitcoin's gravity, and they went up. Binance Coin, BNB, XRP, ADA went up, AVAX went up, and Chainlink. But Chainlink is a little bit different. Look at that different personality. Chainlink took off earlier. Chainlink has been a very interesting crypto for a while now. This incredible improvement in Chainlink's price will see it actually get a spot in the top 8. Well done, Chainlink. NVIDIA owns 80% of the advanced chips required in AI, and it's pursuing a $30 billion custom chip opportunity with a new unit. At the same time, Jeff Bezos has sold $2 billion worth of Amazon shares, but don't worry, he's still worth $200 billion. Elon Musk and the SEC are at it again. The SEC is probing Elon. Ouch, that must be uncomfortable, Elon. As we saw in the news and the main markets, the market indices are romping up. When trading and investing, it's often really difficult to understand what is behind these price movements, this price momentum. Why does it come up and stop, and why does it consolidate and then break out? What is actually going on? Let's pop on the indicator from the service. This will give us a really good idea of what the structural levels are inside the market. Here, we're analyzing the S&P 500 over in excess of 55,800 days worth of data. The indices came up, the S&P 500 came up and struck this area of structural resistance at around that 49.70 mark. And then it backed down. Where did it back down to? You got it. Structural support around the 49.33 mark. And then it broke up above that structural resistance. It's been making its way to overhead structural resistance around the 50.40 mark. Inside this month's service, I explained to the service members how important it was if we got a break above this particular area, the indices were likely to rally. And that was on the back of news that it was very, very negative for the markets. That's why, to get rid of any anxiety, just focus on these structural support and resistance levels. They're the ones you need to watch. All markets are intercorrelated and interdependent. What I've just drawn in here, this overlay, is Bitcoin's price momentum. And we've seen Bitcoin improve significantly from this 47,507 mark. It's currently around $48,100. It's still doing really, really well. What we see here is that no Bitcoin can escape the stock market's gravity. If the stock market is coming up, we can be pretty assured the risk-on behavior is flowing through to the crypto market. A lot of people think, oh, I'm in crypto. I don't need to look at the stock market, the bond market. Who cares about that? That's just for old people. What about the Forex market? Oh, that's not important. The Forex market is actually the largest market in the world. The stock market and bond market are quite substantial. So you can think Forex is big, the bond market is big, the stock market is big, and crypto is tiny. But they are all markets, and all markets are intercorrelated and interdependent. We'll be looking closely at the futures. If we see the S&P 500 futures, the Nasdaq futures just ramping up to take out this 50.42 level, that's really good news. That means the bulls will be in control. We would expect a certain amount of resistance because after all, there's a structural resistance level there. And that's the first one we've struck from around that 49.69 area. So that's something to bear in mind. With the CTKS method, you're actually marking up all of price history, not just recent indicative price, which will typically RIP your money. If the bears get in control, we would expect to push down at least to this recent level because that's where a lot of retail will be looking at around that 49.90 level, and then they will hope for it to consolidate and come back up and attack. If we get above this level, seek for a meaningful consolidation before just pushing to the upside. Which way do you think it will go? Please let me know in the comments. Let's quickly have a look at the Nasdaq. And when we look at the Nasdaq, we have CTKS method paths in here that predict normalized price momentum. And it takes it into account structural levels of support and resistance when doing so. One thing that you notice here, the Nasdaq is following the positive price path at the current time. The Forex market is the largest market in the world. And what have we seen recently inside the DXY that's been marked up in excess of 20,000, nearly 800 days? What have we seen? The DXY rallied up to a specified level and then sold back. Just wobbled around and trying to figure out if it's going down and down and down, or it's deciding to just find support and come back up. If the DXY comes back up, expect yields to increase, further negative price pressure on gold and commodities. Also expect oil to back off, and if the DXY starts to come up, expect risk-off activity inside the main markets and crypto. That means we would expect prices to fall. How do we know where the structure is across this nearly 21,000 days? We've got to pop on the indicator from the service. Of course, you can mark it up yourself if you know and have gone through the certification on the CTKS method. What the heck is the CTKS method? It's the world's most powerful smart money buy and sell level detection system. It gets you to an institutional level where you don't guess, you know, but let's prove it. Popping on the indicator, what do we see? Ay caramba. We've seen that the DXY came down to a structural level of support. These are like trampolines or safety nets. They tend to fling price back from one structural resistance level up to a one structural support level up to a structural resistance level. It may even get through depending on the structure. In this case, we got up to this structural resistance level, a little over 104 for 200. And what happened? We lost this structural support. It just sliced through it. What did that mean? At this point, with this wick, we were on the way back to this lower structural support. It's very important to know and not to guess. Of course, we would expect the DXY to find structural support around this area. It can overshoot, and that's something to bear in mind. It's not a brick wall, it's a safety net. So it can go down before it flings it up, or it can just cut through it. That's why we must observe actual price action. Now, what happened if the dollar bulls gain control? They will seek to push it up to around this 104.3500 mark. If they get really strong, they'll seek to challenge this once resistance line and seek to turn that into support. How could we know what's happening with the DXY? There's 1,000 ways that we can look, and it's all about the Tier 1, Tier 2, and Tier 3 charts. For fans of moving averages, here I've got the daily 50-day moving average on Bitcoin, the 100-day moving average, and the 200-day moving average. There's an inherent problem with averages. One thing is that they're averages. They literally just average this negative price behavior and positive price behavior. But because they do it over such a long period of time, it takes time for it to show up. That's why we look at the CTKS method to reveal our X-ray vision on where any specific price chart is headed. And we can see some pretty interesting things in Bitcoin right now. The first thing that we note, a lot of retail will be looking at this 50-day moving average, the 100-day moving average, and you don't even see the 200-day moving average at the moment. They could expect price to come down to this 50 or 100-day moving average. Just bear this in mind. People would be thinking from a retail perspective, oh, we're going to have mean reversion. We could have a sell down like this to take us all the way back here. But we know it's a lot more complex than that. It really depends what the DXY does. If the DXY breaks down like what it could, we could see a tapping up of Bitcoin into the 50,000. And if the DXY finds its structural support and then starts to bounce, we could see a retracement from those areas. Make sure you keep your eye on the structural levels inside the US 2-year yield and the US 10-year yield. You can see what they do to gold. They absolutely whack it around. Looking at Bitcoin right now, we can see that Bitcoin has two ways that it can go. It can go into this structural support area, which is quite a wide area of structure, from around that 46,225 to 46,850, and Bitcoin is currently 48,106. Alternately, it could come into structural support, which is from about the 50,350 mark to 50,471, structural resistance, and there is another structural resistance above it. Remember, support acts as a safety net to rebound price up. When you see structural resistance, it acts as a ceiling to push price down. This is very important to know where they are because of how they work in terms of price action. We can see that Bitcoin, after staging one heck of a rally, has done particularly well, but it is in consolidation at the current time. We can also see that it's not really rallied very strongly and from this around 48,750 mark. It came down, but it just didn't retrace enough to break that previous high. This means that we're in a weakening trend just at the current time. Any rally that occurs has not broken the previous level of resistance. Please just keep this in mind. It's important to look at. This trend is currently weakening. This could point to some strength in the DXY. How should people actually view this? If you're viewing it and you believe Bitcoin is the place to be, the risk-on asset class, you would be accumulating as Bitcoin came down into structural support. And that is a great way to go. Bitcoin's returns this year have been phenomenal. The key is to please don't panic. And if we start to break this local resistance, and we've got 3 levels of local resistance that retail traders and investors are going to be looking at. They're going to be looking specifically here. They're going to be talking about 3 levels of pretty much fake resistance, but it is important to look at this first level of structural resistance from a very short-term perspective, which actually is just retail resistance at that 48,572 mark. A lot of people will be looking at this, something like this. If we get up to here, we need to break and we need to retest and we need to go from that perspective. But you know, the structural resistance isn't there at all. Bitcoin's momentum is currently being transferred in from different charts. And this is an important thing to understand. Bitcoin is a puppet chart to other charts. It's puppeted around by the DXY, by the US 10 and US 2-year yields, by the futures on the S&P 500, the Nasdaq, the Dow, and the Russell, and so many other charts. It's important when you're looking at Bitcoin to not only look at Bitcoin, but look more broadly across the Tier 1, Tier 2, and Tier 3 charts. Of course, this takes many decades to understand and realize, and quite significant losses. All professionals eventually learn this, but it comes with a lot of losses, potentially multi-million-dollar losses. I'm just trying to save you from those losses at the current time so that you can understand there's a difference between retail sentiment that only looks very, very short term and institutional sentiment that crunches the numbers. They run the numbers across all of price history and they understand interdependence and intercorrelation. These are your 3 key levels to watch for upside to Bitcoin. And of course, if Bitcoin is breaking through these retail levels, expect the retail herd to just jump on. I'm expecting a bit of a spike up to around that 50,000. But of course, it could go down the other way, so you need an accumulation strategy. You need 3-dimensional strategies. An up strategy, a consolidation strategy, and a down strategy, playing out at all possible times. And this can't be academic. If you find the price just sliding down and down and down, and it can get really nasty, especially inside crypto, well, it can get nasty inside the stock market and Forex and commodities as well. But you need a strategy. A favorite chart inside the service and inside our community is Solana. Solana has so much power, and here we've marked it up for 1,235 days. I'm going to pop the indicator on from the service in a minute, but just notice what is happening here. You can see some weakness developing here. The alts typically give us a bit of a front row seat to strength or weakness inside Bitcoin. Let's just pop on the indicator from the service, and if you would like the service indicator, just pop across to ctksmethod.org. You can see that Solana has a tremendous amount of structural support down in this area, around that 101.70 mark down. You can also see that it had one structural resistance level playing in there. I'll just show you what I mean. Coming through all of this structure requires the price to consolidate, and then we came up and dropped back and retested. You'll notice this a lot. These particular structural levels are very important to keep your eye on. You can see there's one around that 111 mark. One down, very close to the current price. We tend not to sell at support because selling at support really is a bad idea, because when you sell at support, you're probably going to get a bit of a bounce to the upside. What we've noticed recently is some degree of weakness inside Solana. There's been a short-term cut under, and this means that it's favoring negative price momentum. If it comes down to this 103.30 mark, and don't forget that it can overshoot, we've still got a lot of structure around this 101.70 to the 100 mark, so just bear this in mind. It really depends on how much you believe in what you're putting money into. If you don't believe in it, you're going to run and run like hell as soon as the price goes red, only to come back in as the price goes green and to buy, only to go out again as the price comes down. So you really have to be careful on which side of the percentage you buy. Always seek to get onto the right side of the percentage. That is, accumulate when prices go down. And don't forget, you can do that in an uptrend. If things are just romping up, you can place your buy orders at or between levels of structure. You do not have to pin the bottom of every move. That's a retail mindset and you don't want it. It's going to cause you so much stress. Just don't think like that. Tops become bottoms and bottoms become tops all the time. There is no bottom, said Neo from the Matrix. And there is no top. But what there are probabilities, and you get the ultimate probabilities from knowing and understanding these structural levels. These are your guide rails, your safety nets, and ceilings inside market structure. It's vitally important to stay positive. There's a lot of volatility as price just bounds from structural support to structural resistance. That's why we have the CTKS Creed. These are simply daily positive affirmations for abundance, financial success, and happiness. The older you get, the more that you understand. Life is not about what you get, it's about who you become as a human being. Any better habit that you create creates a better life with more happiness. And these specific positive affirmations just gear your mind for abundance. And that's really important. A lot of people have been asking that I read this out, so let's go for it. I know the universe wants me to succeed. The me is you, if you know what I mean. Every day I show kindness, integrity, and gratitude. I know opportunities in life reset daily. I am worthy. I go slow to go fast. I start small and scale with buy on red, sell on green. Life pullbacks give me the strength for the next life rally. I am dedicated and committed. I win or learn and never blame. And I never let a problem beat me. I solve it with positive excellence. Thank you to everybody who comments on the daily videos. You're just awesome. And of course, very, very grateful for you watching this as well. All the structural levels that I went through are from the service. You'll find the Tier 1, Tier 2, and Tier 3 structural levels for TradingView, those TradingView indicators at ctksmethod.org. Have a great day or night ahead, my friend, and Kate and I look forward to catching up with you again in the next video. Bye for now.